Hello and welcome to the trade on this Friday. Before we get into the charts, let's take a look at what traders are watching out there today. President Trump suspending 25% tariffs he imposed this week on most goods from Canada and Mexico. A reprieve there, and the latest twist in trade policy that has whipsawed financial markets and increased concerns over inflation and a growth slowdown. He said that he would soon decide whether to revoke temporary legal status also for some 240,000 Ukrainians who fled the conflict with Russia following a report that his administration planned to take that step. And a shift in German fiscal policy has compounded uncertainty for traders trying to bet on how fast the European Central Bank will cut rates for the remainder of the year, with a change to the bank's guidance on Thursday reinforcing that, having cut to 2.5% in its key deposit rate. And in further development, Donald Trump is considering a plan to stop and inspect Iranian oil tankers at sea under an international accord aimed at countering the spread of weapons of mass destruction, according to a report in Reuters. Well, let's now take a look at the charts. And I caught up with Richard Wiseman earlier from Wiseman Consulting, who focused initially on what we're seeing with US equities, with the NASDAQ now in correction territory, but his focus is on the S&P 500.
So all the U.S. equities are under pressure. We are at a key level of support, which you can see on an intraday level. We keep breaking it. And then buyers do seem to be coming in so far. What I'll tell you is, probability-wise, having looked at these charts for almost 40 years, the more times that we test a certain level and break it intraday and then close above, the more likely people are to become very confident in selling that quote-unquote support level. It does seem like that's what's happening. And if we were to get a close below that 5,800 on the S&P 500 futures, we could be in for a much deeper correction and maybe even a down year for all of 2025. So it's a key level. As you can see, every day we keep testing it, but I don't particularly like the fact that we keep testing it day after day. I think that there's a weariness in dip buying as you continue to do that.
What if we see a sustained break below that level? What's the next level to consider, do you think?
Yeah, you can actually even see it on that chart. It's at around 5,500, but there's levels all the way down. This thing could get really serious. Maybe even the round number of 5,000. Not right away, but throughout the course of a down year, big correction, and it's just the nature of the beast. In general, long-term, investors with a 30, 40-year horizon, probably nothing to worry about. But if you're looking at a 1 to 2 year horizon, it could get pretty ugly out there.
All right, something to be very aware of, particularly at a short-term basis. So, Richard, that's what we're seeing in equities. Now, of course, so much of it's been driven by what we're hearing from Donald Trump, in particular, the uncertainty in regards to global trade and tariffs. That's also impacting what we're seeing in currencies right now, particularly with the US dollar having come under significant pressure. What are you seeing there?
Yeah, so if you remember, testing your long-term memory, but the last time I was on, BOJ was starting to act to kind of strengthen the yen against the dollar. That trend has continued, and the most recent trend has been for all four majors to kind of turn the corner. And you can see what we have here in the euro against the dollar is what I believe is a key breakout above the 105.25 area. And, there too, this could be a long-term trend change, maybe forecasting, again, not right away, but eventually to the 110 handle. So there could be a lot more to come in this. And there was a nice level of consolidation there for months where the market kind of tried to go lower and was kind of just going sideways, unlike the down move that we saw in the Aussie. So this one, as well as cable, as well as the Swiss and the yen, they all look like they are moving up against the US dollar.
Well, in fact, we saw both the yen and the Swiss franc move higher again in the past session. Richard, you mentioned the Aussie. Where are you seeing the trend develop for that?
Yeah, so I still need more evidence of a bottom. I think right now it's a market in consolidation, so it's no longer trending lower, but along with the loonie, it seems to be sideways for now. So I'd like to see some key levels of resistance taken out before I could call a bottom there.
Richard, let's move now to commodities with the focus on oil. Now, of course, Donald Trump saying he wants lower oil prices. He's got his way, it would seem. Particularly if you take a look at crude, it continues to fall. Talk us through those levels you're watching.
Yeah, so this is one of those situations where he's getting his way, and it might not be for the reasons that he likes. It does seem to be another piece potentially of a risk-off recessionary weak economy scenario. So we talked about this last month that crude oil seemed to be in a downtrend. There was some short-term reaction, but they never broke that downtrend line that I've called out on the chart there. You can see the support is roughly the bottom of the chart. So it's the 65 area, but for people that are really looking, with a microscope, it comes in at around $64 a barrel. I think the bad news for the bulls is below that, we could be seeing a much deeper bear move. And it kind of might line up with a weak US economy or a weak global markets even, and less demand from the consumers for petroleum products, driving us down, again, not right away, but eventually to 50, and even an off chance of hitting $40 a barrel if we have a deeper recession than a lot of people are forecasting.
Richard Wiseman from Wiseman Consulting, and that is the trade for this Friday.